President Donald Trump could trigger a financial shockwave costing the U.S. government up to $60 billion if he follows through on threats to fire Federal Reserve Chairman Jerome Powell. According to analysts, removing the head of the U.S. central bank would likely spark a surge in Treasury yields, as investors react to fears of rising inflation. That jump could increase the government's borrowing costs, adding to the national debt. Gennady Goldberg, the head of U.S. rate strategy at TD Securities, estimates that ousting Powell could add $58 billion to the government's annual interest payments. If interest rates jump, the debt burden could very quickly become unsustainable, Goldberg warned. Trump recently hinted he might remove Powell, citing frustration over the costs of the central bank's $2.5 billion headquarters renovation. While stopping short of a commitment, he told reporters, "I don't rule out anything, but I think it's highly unlikely unless he has to leave for fraud." The president has repeatedly criticized Powell in recent months, calling him a numbskull for not cutting interest rates more aggressively. If Trump were to fire the Fed chairman, analysts warned investors would likely lose trust in the central bank's independence. As a result, they would demand higher interest rates to make up for the risk that the Fed could be influenced by politics. That increase would significantly raise the government's borrowing costs. Goldberg estimates it would add about $58 billion to the interest payments on the $276 billion in 30-year bonds and $168 billion in 20-year bonds the U.S. typically passes each year. Analysts caution that the consequences of the move would go far beyond higher borrowing costs. It could also trigger a loss of faith in U.S. financial stability. If investors sense that the Fed is no longer free from political influence, the dollar could weaken and markets could begin pricing in the possibility of more aggressive spending and borrowing. It would be a very key progression point in Trump's agenda. You'd assume the next logical step is that he can push harder on other things, Alex Everett, a fund manager at Aberdeen, said. He also warned that it could be accompanied by a sharp drop in the dollar.